Good afternoon, everyone. October 19th, 2025, the week ahead. First things first, tradingnest.tv coming out soon in the next couple of weeks. Sign up with your email address, get important updates and a promotional price to be one of the first on the site. So this will be all the things you're used to, the chat room, and I'll probably be on at least 2.5 hours a day, probably 3 to 4 hours a day. And then once you sign up and you pay the monthly fee, everything else will be free. Free indicators, free scan results, free videos, free webinars. Everything else will be free. I'm not going to stick you with anything else. So that's number one. Number two in here, what else are we watching for this week? Had to promote myself a little. Number one, if they come out, you got the CPI coming out Friday. That could be a big deal in here. And the initial jobless claims on Thursday. What else are we going to watch? Obviously, a lot of earnings. So what earnings are coming out? Well, the most important, you're going to have the Netflix. And sorry, I'm doing this with Snagit, but it just seems like the best way to do it in here for you. You got the Netflix, the Intuitive Surgical. You have some of the regional banks from Monday after the close and Tuesday before the opening. And those could be big deals because they did move the needle last week on people worried about some losses that they had. And that sort of whacked the markets on Thursday. So you got the Netflix coming out. You got the IBM, the Hilton, and I'll be going over all those with you. Like you know, I don't like taking shots on earnings. I've seen probably a 20% success rate trading earnings. Trading before earnings, trading after earnings, reacting to it. That's the way I like to do it. So what else are we going to look at in the markets? Well, this is number one I got to show you, is what's working now. What's working now is not the 50 moving average like I like. What's been working is bearish patterns under the daily ATR trailing stop. Now, I'll tell you, I see a lot of imitations about the ATR trailing stop, and I see a lot of people try to change the colors and charge for it. It's free on Thinkorswim. It's free on TradingView. Just keep that in mind in there. It's free. So once you sign up for TradingView and Thinkorswim, the platform's free anyway. Bear flags under the ATR trailing stop has been working. The MACD going back to zero. After the completion of the bear flag, that works great. The moral of the story, the first sell-off usually results in an oversold condition at those support zones. So you want to play those after the sell-off in the rally and then go to a shorter-term chart to time your entry. That was a beautiful one. So are there other ones that look exactly like that? Well, we'll get into that a minute because I think we're sort of in the in-between. So I'll just show you what we're talking about. So number one, the ES was just up 15, and luckily the thumbnail is about respect if the break up or down in wedges. So what are we talking about? We're talking about that. So now we just talked about the ATR trailing stop. The problem is you have the administration. A lot of people don't want that to break. On the other hand, when you have lack of buybacks 5 weeks prior to earnings, and we're in the buyback blackout zone, any kind of bearish news is more likely to work. The key for me is watching that MACD, just like you saw with Axon Enterprise. How is this up here going to navigate that down there? Is this going to go to a new high so it's going to work off that oversold by invalidating that? Well, it looked that way about 15 minutes ago. Now the ES is only up 2. Like I said, bad news is more likely to rock things. So we're going to be watching that carefully. Now, it's real possible nothing happens for a couple of days while they wait for the biggies like Netflix. But I'm watching that, and I'm watching that. Same kind of thing. You get the MACD, and I'm going to erase that little arrow on the right. That was from a long time ago. We're going to be watching that, and we're going to be watching this. We're going to see how it works off those oversold conditions. Right now, you're working off that oversold MACD on the bottom by retaining a bearish structure. The biggest thing everybody's watching is that Russell, because it looked like the Russell invalidated any kind of bear flag. But as you see, it didn't have the same structure. That happens a lot at this time of year, where before you had the Russell underperforming and the market's outperforming because they're buying back stock. Most of the big buybacks are in the S&P. You're getting it the opposite now. The Russell's outperforming. The S&P is affected more by news like it should be. But the verdict's still out. Verdict's still out on all these, not telling me a thing. German market, not telling me a thing. And that's what I was talking about with Exxon Enterprises. Those are defined bear flags. But then when you look at like the German market, you look at Marriott, totally different. You look at Meta. Heck yeah, they could be bear flags. But the problem is that nothing is that cut and dry like Exxon was. Meta, the problem is a bear flag against support is not to be trusted, not as much. You saw it with the ES. Go to an hourly chart of the ES. You got that bear flag and it's refusing to go down because of that support. So you're seeing the same thing in Meta. There are a number of stocks that look like that. I like a bear flag, and I'm going to erase all this, when you have an air hole. You have nothing underneath. Here, you have a lot underneath, and that's been the problem. That's why it takes time for that MACD to recycle back up to here so you have enough energy to plow through it and go to the next level. So the big thing, and this was all in the news this weekend, the big disparity between everybody hurt by inflation, everybody hurt by healthcare costs that could go up dramatically, people affected by the shutdown, and then you have the rich people that are making a fortune in their 401k and they're still buying. You can see the difference. You got American Express going bonkers. You got Capital One did nothing. In fact, it might be a bear flag. This is theoretically appeals to not the upper crust, while American Express does. And there are all these articles about the haves and the have-nots. The key to me is just to go on the charts. I'm not going to say any kind of value judgment of what's going on with the markets. What has happened in the past when you've had that disparity between the haves and have-nots? Right now, it comes down to, I think, deteriorating consumer quality. So if you see the consumer really deteriorate, I think you're going to see a lot of stocks have a problem. At the moment, no. Is it going to affect Tesla and Apple? Nah, maybe not. That's more affluent the way I look at it. Is it going to affect other things? Yeah. Walmart? No. People always go to Walmart. But then you wonder about some of the other stuff like Freshpet. We use Freshpet, or let's put it this way. We like using Freshpet, but the problem is it's discretionary. It's like $28 to buy some funky stuff for your dogs and cats. Guess what? Now, when it's $28, we'll just go to Costco, buy a $4.95 rotisserie chicken and chop it up for a week. Yeah, that's the problem. You start getting people cutting back, and you're seeing it in the fresh pets of the world. You're seeing it with a lot of consumer discretionary that isn't just appealing to the upper crust. So that's what we're going to be watching to see if this bleeds into everything else. So let's just show you some of the charts we're watching. So number one, take off the tradingnest.tv, and I'm going to show you, or we could leave it up there. I might as well promote myself as much as I can. I want to show you the other thing we're watching. We're watching this. We're watching a lot of stocks like Carvana. Now, that's not just the upper crust. And look how this stock has acted for the last 2 months. It's acted terrible. But the key is that it ended on a long-legged doji followed by a down candle. It worked here also and worked here. So then it comes down to, are there other stocks that might look like this? Now, don't get me wrong. I'm going to look for uppies and downies. But I just want you to realize that there have been like at least 400 stocks in downtrends in the last 2 months. So you have everybody on the internet just showing long ideas when there's a boatload of things on the downside. We've tried to make both ways. So let's just go into it so you know what I'm talking about. Go into these. These are stocks that have had dojis in the last 5 days. Like I said, on the news site, I'll be giving you a lot of scan results. And you'll see, yep, Reddit worked great. So go and check this out. I'm going to move it over. You see the long-legged doji and the follow-through. We're going to have a lot more like that. And like I said, a lot of people don't want to short when it's already down 40 points. Well, it went down another 40. So go into here and you're going to see there are a number of stocks that are still looking poor. So you got ALAB, you got 5 below. What's that doing? That it does not work. Didn't get a follow through to the downside. If you even think of playing to the downside, you want the follow through. Remember, I love Pepsi because of activists. Action. We did fine in there. We are looking at longs and shorts. Don't write that off. So you might ask, how about the eats of the world? Discretionary already getting murdered. How about some of the other ones? Let's go and take DRI. Already on its low for the year. So what you're getting is input costs going up and people not as thrilled about going to restaurants and the restaurants being scared about passing on the costs, as you see. Which brings me to Costco. What the heck do you do in there? Same store sales were good, and the stock's near its low for the year. Yep, that's not just the upper echelon. I think that's what we got to watch. And the other thing we have to watch is those MACDs, the overbought under the ATR trailing stop. That's what's been working. If it works, I'm going to stay with it. So we're going to look for definite long ideas. But heck, how on earth can you not look at like some of the other ones that are starting to top? PFGC comes to mind. Are there other ones? Well, I'll show you. Let's go into here and we're going to take my main list and we'll take the biggies. I want to trade more of the biggies. Now, I love trading like the OKLOs of the world, but the problem is the options, usually you can drive a truck through the markets. Makes it very difficult when it has a 30% wide spread. But we will try to trade the OKLOs both ways. We'll try to play the SMRs both ways. All of a sudden, somebody isn't pressing the button at the moment. They get pounded. So we'll play those both ways. The same with the LAB. Well, I'll tell you right now, that sure looks like a sell is for rallies, but it's already oversold. That's what you get around earnings period, a lot of these divergences. I think the way to play it is to wait for your pitch. If you see this under the ATR trailing stop and you see it overbought, not oversold, you look for the reversal pattern on the downside. Now you got a stock that looks like a dog, but it's oversold. Not going near it. When I look at all the stuff that I try to line up, I'm having a tough time just doing something overnight just to do it. I'd like to wait for my pitch. I think RCL is going to be one of them. And I'm looking for the ones overbought under their ATR trailing stop. So let me just show you because, yep, I did it for you. So we're going to go to my SMR. I call it SMR. And we're going to go over here and we're just going to go to only the ATR trailing stop. That's it. And you're going to see that there are a number of stocks overbought with a MACD under their ATR trailing stop. Now, I'm not saying I'm bearish on Regeneron. That isn't setting up the way I'd like. Deere, not setting up. They look like reversal patterns, but some of them might. ADI getting up to resistance, overbought in a downtrend. Seagate Technology getting overbought in a downtrend. CAR getting overbought in a downtrend. So there are going to be some good ideas on the downside. On the upside, I got to look at things like this. Even the ACHR, I think they had a good article over the weekend, just so you know. But I'm looking at it this way. Oversold over everything. But you got to wait for that reversal candle. We don't have it yet. So there are a number of overbought and oversold. I will be revising my list first thing in the morning. Like I said, I'm only at Simpler for another 10 days. Then I'm out on my own. I will be showing all these kinds of trades in the tradingnest.tv coming up soon. Take care. Have a good one.